What's up YouTube, Silver Dragons here, and as you can see, silver is taking off once again. It is up almost $1 today, and what I want to do is show you a tool that I utilize when I'm stacking gold, when I'm stacking silver, and explain to you how it works. But I want to show you a new way to use this tool as well, something I've never shown before online. Let's get into it. SD Bullion is giving away a monster box of 2024 Tree of Life silver coins. Sign up today at sdbullion.com/sweepstakes. Thank you so much for watching. I do sincerely appreciate it. This video, I'm going to share with you one of the secrets of silver stacking and a new way to look at it. We'll show you that in a moment, but first, check this out. Silver sitting at $27.57, up 89 cents at the moment. That's a big jump up, over 3% gain, while gold only gaining 1%. However, 27 bucks up, sitting at $2,334. So both gold and silver moving up today. Silver moving up much faster than gold, and we can see that when we look at the gold-silver ratio. Now, this is the tool that I want to talk about, and of course, I'm going to be showing you a new way to use this tool. But before I do that, let me just go over the basics. So some of you are aware of the gold-silver ratio. I've talked about it in previous videos, and essentially what it is how many ounces of silver it would take to buy an ounce of gold if there were no premiums attached. So right now it is sitting at 84.67, which means if you multiply this number by silver spot price, you're going to get the spot price of gold. That is all that the ratio is. How many ounces of silver equal 1 ounce of gold? And this is an extremely important tool. It should not be overlooked. Now, at its most basic level, this tool is used for helping people to decide whether they want to purchase silver or gold. You could also use it on the flip side. Do I want to sell my silver? Do I want to sell my gold? When this number here is over 80, I like to primarily stack silver, because that means that silver is undervalued as compared to gold when we look at it historically. Let's back up this chart to all. You can see it's gone up and down quite a bit, but sort of the average is right around 60 or 65. This is only going back around 30 years, but the average is about 65. So if it's over 80, silver is certainly undervalued as compared to gold from a historical standpoint. Now, when the gold-silver ratio is between 80 and 60, I like to stack a combination of gold and silver. So again, above 80, I stack silver. Between 80 and 60, I like to stack a combination of the two metals. And then if it falls below 60, I would primarily be stacking gold at that point. Now, what you can do with this ratio is you can sort of play it on the extremes. So if it goes very high, like for example during COVID, it went up to about 120, you could actually sell your gold to buy silver at that point in time, and that would be a good move. And then if it goes extremely low, like it did back in 2011, it went all the way down to 32, you could sell your silver to buy gold. And by trading the metals back and forth during the extremes, you can greatly increase your stack without adding any money. Think about that. All you're doing is trading from silver to gold and gold to silver. You're not putting in an extra dime. No more capital needs to go in, but simply by trading between the two metals, you could increase your stack 2, 3, 4, 5, 10 times over the course of your lifetime. So this is an extremely helpful tool. It's very important, and everyone who's stacking precious metals should be aware of it at least, and also know how to use it to your advantage. Now let me show you a new way to use this tool, which I've never done before. So here's what we're going to do. We're going to assume that the price of gold right now is this standard, Okay, and silver is fluctuating around the price of gold. This is actually usually what happens. Gold is pretty stable and silver kind of goes up and down faster. Silver is much more volatile. So if we assume that the price for gold is the standard, we can then look at the ratio and determine how high or how low silver would need to go to meet the extremes of the ratio that we've seen in the last 5 years. And this is actually really helpful to do. You might be totally confused right now, but let me break it down for you with an example. So let's get the calculator out, and we're just going to pick a random point in time. Let's say August 6th, 2020. Now, this is actually not a random point in time. This is when silver hit its recent high of 29.77. That was the highest silver got during COVID. But if we take gold's number right now as the standard and divide it by this number, 69.50, that would tell us where silver would need to go to meet the ratio that we saw back then. So we'll go 2,334 divided by 69.5, and we get $33.58. So think about that for a second. Silver would need to go up $6 an ounce from where it is right now and have gold not even move at all. I mean, gold would likely be going up, moving the target if silver did go up $6, but let's just say gold doesn't move. Silver needs to go up $6 an ounce to be where it was at during COVID. So silver is obviously undervalued right now as compared to gold. If we just look at the past 5 years, it needs to go up significantly to be where it was at before. That's how you can utilize this tool. And this isn't even the most extreme number we could come up with. In fact, if we look at, let's see, March or February of 2021, the low was probably around right here, 64.17. So 2,334 divided by 64.17, you get 36.37. Wow, so silver needs to go up like $9 an ounce for the ratio to get back down to 65, with gold not even moving. I mean, obviously gold would probably go up, $100, $200, $300, $400 in that period of time. I mean, silver would probably need to go to like $40 an ounce. But for the ratio to get below 65, silver's got to go up $9 an ounce. And that ratio has been seen in the last 3 years. I mean, it was almost 3 years ago when we saw that ratio last. So it is not outside of the realm of possibilities to see $36 silver in the near future. Now, we can go the other way, though, with this. We could see the lowest silver could go based on the ratio in the last 5 years. So the height was 121.44. This is when silver went down to $12 an ounce, right when COVID was getting started. And this is the most extreme the ratio has ever been for all time. We've never seen a higher number than this. But let's say, once again, gold is the standard. Gold is not moving. 2,334 divided by 121.44. And we get $19.21. If we have some type of stock market crash or something like that, and the price for paper silver falls off a cliff, this is where it could go. I mean, this happened just a few years ago. It's possible we could see silver go below $20 an ounce. I highly doubt it. I don't think this is going to happen. And obviously, this would just be the price for paper silver. Physical silver that we buy and we stack, the premiums would probably shoot up, and you wouldn't be able to get silver below $25 an ounce, let's call it. But either way, when using the GSR and seeing where it's been over the last 5 years, we can extrapolate these numbers, $19 silver and $36 silver. That's the range of where silver has been as compared to gold. What if silver went back to where it went in 2011 and the ratio got crushed all the way down to the 30s? So I want to figure out the lowest that it was. We're going to zoom in on this day. So April 28, 2011, it hit 31.69. This is the ratio, right? So let's do the math here. 2,334 divided by 31.69, Oh my goodness. $73 silver. Wow. Okay, so for silver to go to where it was in 2011, based on the ratio and where gold is at right now, silver would need to go to almost $74 an ounce. So that was pretty fun. I mean, basically all we did was assumed gold was the standard, and we extrapolated where silver could go based on the GSR in previous years. And that was kind of fun. I mean, I didn't realize silver would need to go to $74 an ounce to get the GSR back down to the low 30s. That's actually kind of crazy. We could see that happen this decade. I mean, I certainly think it's possible, but we could also see it start moving down again. I don't know what the future holds. All that I know is I don't trust the dollar. I don't want my wealth stored in a fiat currency that can and will be manipulated, and it's going to keep going down. The dollar is destined for failure, but gold and silver, they are outside of that system. And if I put my wealth into these metals, which are real money, I'm going to be protected. That's the bottom line. I'm buying gold and silver for insurance, for savings, and for protection. So I'm not going to stop stacking. But again, when we look at the GSR, with it being over 80, I'm primarily stacking silver right now. In fact, yesterday I made a few more purchases and they were all silver. I bought no gold. So that's my strategy. That's what I'm doing. I'm curious what you think about the gold silver ratio. Let me know down below in the comments section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.